Summary: The Best Loser Wins by Tom Hougaard. I am an outstanding loser. I have conditioned my mind to lose without anxiety, without loss of mental equilibrium, without emotional attachment, and without fostering feelings of resentment or desire to get even. My knowledge of technical analysis is average at best. My knowledge of myself is what sets me apart. I realized the real answer to the elusive quest for trading profits was right inside of me. Normally, it makes sense to buy toilet paper at a 50% discount, but it makes no sense to buy a stock that has fallen more than 50%. Concepts like cheap and expensive may work in the world of Saturday grocery shopping, but not in the financial markets. In trading, a normal human being, displaying normal thinking patterns and traits, will never stand a chance of making money trading. For example, we can all learn to walk a tightrope suspended 1 foot off the ground. However, can you walk across the same tightrope when it is suspended 100 feet off the ground? We can all trade bravely and aggressively when we are trading one lot, but can you trade with absolute clarity and emotional detachment when you are trading a 10 lot or a 100 lot? What 99% of traders do not understand is that when you win, there are things happening in your brain chemistry, which, if left unnoticed and unchecked, will have a detrimental effect on your decision making. My job as a day trader is to read the sentiment and to keep my own emotions in check. I need to have a mental flexibility that is never described or accounted for in economic theory. I also need to know when to hold, and when to fold. Based on the experience of a CEO for a trading company in London, many people make a lot of money, but very few manage to keep the money. Almost all clients have more winning trades than losing trades. However, they tend to lose more, much more, on their losing trades than they win on their winning trades. The ratio is for every pound they win, they lose about 1.66 pounds. He also said someone who opens an account with anything less than 100 pounds will with a very high degree of certainty, lose that money. Someone who trades everything and anything, overtrading, will eventually lose their money. Anyone who is unable to hold on to their winners but hold on to their losers will also lose their money. Anyone who adds to winning trades will catch our attention. Anyone adding to their losing trades will lose their account at some point. Anyone trading without a stop loss will follow that path too. From cradle to grave, from morning to night, from one year to the next, the average person is engaged in a remarkably similar pattern of thought, pattern of action, pattern of hopes and dreams, fears and insecurities. We call that person normal. If normal is the familiar pattern, and if normal is opening an account with a CFD broker and proceeding to lose the money eventually, then normal is simply a representative of everyone else. Everyone who is normal will end up losing. Newcomers are led to believe that it is all about technique and strategy. No one is preparing them for the fact that it isn't strategy that will set them apart from other traders. It is how traders think about their strategy, and their ability to follow the strategy, that will set them apart. Normal behavior is to engage in a never-ending cycle of education, looking for the next new edge. In the beginning, I was always told to buy low and sell high. But every time I bought low, it always went lower. So what kind of advice was that? People will attend weekend courses hoping to learn secrets. People will study and learn to use tools such as candlestick analysis, stochastic, RSI, MACD and moving averages. The list goes on. All of this is normal behavior in a nutshell. Reading a book like Technical Analysis of Stock Trends is a must, but please don't think it will make you a professional, profitable trader, any more than reading a manual on tennis will enable you to compete with Rafa Nadal. I wrote this to my student: are you thinking that because it has fallen 400 points, now it is cheap, and maybe just before the close, you may see some buying of these cheap stocks? I myself used to think like that too. That was when I was not profitable. The Dow didn't rally into the close. There was no bounce. I am sure my student didn't lose a lot. It wasn't so much his wallet I was concerned about, it was his way of thinking. As traders, we tend to engage in a never-ending, predictable cycle. We trade well for a while. We are happy. Our discipline weakens. We lose money. We strengthen our resolve, and we get more education. We do well for a while. We lose money. We stop, sometimes for a while, sometimes permanently. Sounds familiar? Everybody has good spells in trading. Everybody has period when they make money. Everybody has their moments. I am sure you have too. So what happens? What happens is that 99% of people do not know how to lose. The emotions they experience when they lose cause them to act in a manner which is not in their own best interest. A free solo climber is faced with severe consequences if they lose their grip. They acclimatize their minds through years of practice, so that their amygdala, the emotional response center of the mind, is not firing on all cylinders. They are calm when climbing. An elite soldier is scared to death the first time he is in combat. That is why the first combat will be a simulation. And the next one. And the next one. Slowly, his fear is trained out of him, through repetition, breathing awareness and habituation. For every hour you spend on technical analysis, you must set aside at least 25% of that time on internal analysis. You need to know your weaknesses and your strengths. If making money is your goal, and 99% of people lose, and 99% of people think analysis and strategies are the key to trading profits, you can be 100% sure that strategies and analysis are not the key to trading profits. When I am trading, it gives me so much less pain to kiss a 100-point winner goodbye than it does to take my 100 points only to see the market moving even more in my favor. It is because of this philosophy that I am at times able to make 400 to 500 point gains, as I did today. It is one or the other. I don't think you can have best of both worlds. My job as a trader is to identify low-risk trading setups. My approach to trading is not centered around any other tool than price itself. All indicators, more or less, are built from time and price. Therefore, the indicator is a distortion of the reality I am seeing right in front of me. The markets can be range-bound, or the markets can trend. Some indicators work well in ranging markets. These usually perform terribly in trending markets. Other indicators work well in trending markets, but are dreadful to use in range-bound markets. Indicators, they all work some of the time, but none of them work all the time. I truly believe what separates the 1% from the 99% is how they think when they are in a trade, how they handle their emotions when they trade. That is not to say that there is no merit to learning the craft of chart reading. I know from my own experience that chart reading is an absolute must for my decision making, but that is only a small part of the whole trading picture. Do you know why some athletes let out a shout of frustration when they are not performing well? I thought about it for a while, after I saw Serena Williams shout when she lost an important point in a Wimbledon tennis final. I think they let out a cry because it is a way to reset the mind, to come back into balance and get into the zone again. The act of letting out a cry helps them get rid of the frustration and find their inner peace and balance again. After I have identified a low-risk entry point and placed my stop-loss, I have now done my job as a trader. At this point in time, I am at the mercy of the markets. Maybe this will be a great trade. Maybe it won't. Who knows? No one knows. I sat with Luke Donald and asked whether Tiger Woods is a better golfer than he is. He said, "I don't think Tiger is a better golfer than me, but Tiger does have an amazing ability to forget his mistakes and move on. We can be both on the 15th and both made a bad putt, but by the time we get to the 16th, it is as if Tiger has wiped his mind of whatever happened on the 15th, and he is totally in the moment. I, on the other hand, will still deal with the mistake I made on the 15th, and it will affect my performance on the 16th. This is what separates the very best in the chosen field. It is the mind, and what it processes at any given moment in time. The best way for your rational mind to resolve the discomfort of a profitable position is to close it. The best way for your rational mind to resolve the discomfort of a losing position is to let it run. Our trades from yesterday have no bearing on the markets today. It is a new day. It is a new set of circumstances. Yet to most people's minds, the two trading days are connected. Most cannot reset their emotions every morning, and most cannot wake up reset and emotionally in equilibrium when they had a blazing row the night before. It requires a conscious effort. It is for this reason that I warm up ahead of the trading day by going through a process. Our minds have a primary function, which is to protect us against pain. How does Petty overcome his doubts when performing his high-wire walk across the Seine to the second story of the Eiffel Tower? He did a simple visualization exercise. On the spot, I vanquished my anxiety by imagining the best outcome, my victorious last step above a cheering crowd of 250,000, said Petty. The overwhelming majority had an unhealthy mental thought pattern. They would feel fear at times where there was no reason to be fearful. Such as when their positions were making money. In this case, it is the fear of losing the profits accrued on paper. When the clients were in losing positions, they would be reluctant to realize the loss. They think as long as the position is open it might come good. They should reverse their thinking, realize the loss and keep the winning position. From Elon Musk, if you just accept the probabilities, then that diminishes the fear. When starting SpaceX, I thought the odds of success were less than 10% and I just accepted that actually probably I would just lose everything. But that maybe we would make some progress. I draw inspiration from Kobe Bryant, Rafa Nadal, Cristiano Ronaldo, Sergio Ramos, and Charlie Munger, to name a few. Very different people yet all obsessed with the journey, the enrichment of their lives and the perfection of their craft. They found the thing they would love to do even if they didn't get paid for it. Yes, they keep an eye on the dollars coming in, but it feels they perform their craft for the love of it. Many people open trading accounts in the hope of making money. However, their effort is disproportional to their expectations, and their results are aligned with their efforts. They simply don't work hard enough. During backtesting, since the brain prime objective is to avoid pain, a losing trade equals pain. So, the brain sends a signal to the eyes to ignore the setups that do not work. You can replace trend lines with any other analytical tool that you use and the bias will remain in place. Your eyes will only see what they want to see. At best, they may see the losing trades, but they glance over them, diminishing their significance. The backtest result is predictable. The researcher will end up with a chart that results in many great trades. However, cynical traders, people like me, will notice things other traders miss not because they don't have the ability to see them, but because they don't want to. The magical growth sequence of Fibonacci does not rule the market, but somehow it works well for trader Larry Pasavento. The truth is it doesn't have to work all the time to make it a profitable strategy. I gave a talk on Fibonacci ratios and proved that although the 78.6% retracement in the DAX index had a hit rate of 20%, it could still be a useful strategy. You just had to risk very little and go for big payouts. Based on the work by Piapas Theravan, Vasan Siraprapasiri, and Kittichai Rajchamaha, the researchers concluded that the statistical analysis finds little use of both bullish and bearish candlestick reversal patterns since the mean returns of most patterns are not statistically different from zero. In addition, this article finds that filtering by %D, RSI, or MFI generally does not increase profitability nor prediction accuracy of candlestick patterns. There are many ways to make money in the market. Your job is not to follow someone, but to find a way that you like, that resonates with you and who you are and what you like to do. When you act and perform without any fear of consequences and repercussions, you are trading from an ideal state. I once sat and traded for a few months with a guy from Germany. He possessed an almost superhuman ability to do nothing. His patience was unrivaled. While we traded together, I made it a sport to be as patient as he was. It was fun and, dare I say, somewhat painful. I missed many a good trade, but the ones I took outweighed all the others. During a speech, I showed the audience an image of the word red written in blue ink, and asked what color that image was. A lot of them called out red. I showed them yellow written in red ink. Some called out red. But I heard far more shouts of yellow. We repeated this process and over time the audience responses became more accurate. This shows our eyes and minds do not necessarily work in a coordinated manner. Our brain seeing the word red wants us to say red even when the answer is blue. It is as if we consciously need to stop the brain from jumping to conclusions. This is an important trait in trading because we often see things that are literally not there. Charts do not work as well in real time as after the fact. Unfortunately, you have to believe and act. If you struggle with that after a few failed trades, then that is your brain trying to protect you against pain. You will begin to second-guess your signals, and you will sabotage your own best interests. No man ever steps in the same river twice, for it's not the same river and he's not the same man. This is important to bear in mind as a speculator because the market changes constantly. The ability to change one's mind without causing mental disequilibrium is the single most important ability for a trader. Technical analysis is fraught with contradictions. Think about it. You are asked to follow the trend, but what happens when you sell a double top? You are betting against the trend. The same can be argued for a double bottom. You are buying a market that is moving down. The Dow index over the last 30 years had risen from 3,300 to 36,000. You could expect more positive closing prices than negative closing prices. I was wrong in that assumption. The distribution of plus days and minus days in the Dow index is evenly distributed. So, day traders like me can't rely too much on the trend on the higher time frame, because virtually anything can happen down on the 5-minute chart. When I began taking trading very seriously, I would review my trades when the day was over. I would print out the chart and plot my trades onto it. I realized that some 8 out of 10 trades were impulse trades. I began to become much more conscious of my trades. As I proceeded down that path, I became more and more profitable. The fewer impulse trades I had, the more money I made, and the more satisfaction I derived from my job. Indicators like stochastics would suggest a market was overbought or oversold. Those are other words for cheap and expensive. It is for this reason I am no longer trading with any kind of technical indicators. My charts are 100% naked. No amount of hard work, resolve or prayer will turn a bad trading position into a good position. Either the market agrees with you or it doesn't. It doesn't matter how rich you are, how big and powerful you are. If the market disagrees, it disagrees. The market can only hurt you if you let it hurt you. The market will rally. The market will fall. Whether you are on board or not, making money or not, is inconsequential to the market. It knows nothing about you. When you make money because you are aligned with the market. The market is just the combined force of all market players. I came to realize, after years of suffering, that I had to change my relationship, not with the market, but with how I reacted to what the market did. All the successful traders I know have gone through a transformation process. Some were gradual. Others talk about a specific situation which acted as a catapult to success. Some became so disgusted with themselves, they decided that they were going to either follow the rules or quit trading altogether. Dr. David Paul's transformation story: the software called for the market to rise. However, the market began to drop. I bought some more. And yet the market continued to drop. The market bounced for a while and I felt pretty good about having bought some more at what I thought would be the lows of the day. The market then began to head lower again. I told myself it will start to go up. It absolutely has too. I think this is just an AB equals CD formation. The software says so. The broker says so. My trading friends say so. The Elliott count says so. There is no way that all these people in my software could be wrong. My wife then said, right here, right now, this market is moving down, isn't it? It hit me like a thunderbolt. I wasn't trading the market. I was trading my opinion. I was trying to avoid losing trades at all cost. I refused to listen to what the market was trying to tell me. I realized I had to learn to lose in order to win. I was reinforcing my ego through the market. Dr. David Paul said to me, look at your own life. You love to surf. You wait for the waves, and you paddle into their energy flow, and you ride the wave. How is that any different to what we do as traders? When you are out there, sitting outside the impact zone, waiting to paddle in, you don't paddle when there are no waves. You are patient. When the right size wave builds up, you get ready. You are one with the sea. You roll with its flow. You surrender. The purpose of trading is not to be proven right and bolster our egos. Our job is to make money. If that means we come to the market with an opinion, and we are proven right, so be it. If it means we have to change our opinion because the market dictates it, so be it. A more spiritual person than I would perhaps express this as empty your mind and let the market guide you. For example, I was wrong being long in a trade. I got out my long and reversed my position to short. What pleased me most about the outcomes was not that I lost on my first trade and that I won my money back soon after. What pleased me most was that I did not hold on to that losing trade and that I had the mental freedom to move from long to short. When I started trading, there was no chance I would have done that. The most frequently observed behavior is the inability to take a loss. Our minds have one primary objective: to protect us against perceived or real pain. During the process of running an open position that is producing a loss, our subconscious mind is telling our conscious mind to keep the position open. It will mask this message as well as it can, in order to protect the ego, which is more fragile than the state of your trading account. As long as the losing position is open, there is hope that the position will turn positive. The moment you close the position, and you crystallize the loss, the pain of loss becomes real. When I have a losing position and I no longer believe in it, the worst I can do to myself and my psyche is to begin to hope. I don't feel free in my thinking and in my market perspective when an open losing position is beaming at me on my open position monitor. When I close the position, I feel free again, and I am opening myself up to taking in market information from an opportunistic frame of mind. Many times I see clients sit on losing positions for ages. They deposit more money every time their losing position received a margin call. They just didn't want to take the loss. Many times when the position do come good again, the client closed the position as soon as it did. The moment they were relieved of their pain of the losing position, they got out, for nothing. They were so relieved to have avoided the pain of being wrong that they completely ignored the fact that the market was now agreeing with them.
When the pain is real, i.e., real pain has manifested itself in body and mind because of a trading loss, there is no end to the lengths our ego will go to in its efforts to make the money back.
This is the primary driver behind the argument of when wrong, double up. During a losing streak we tell ourselves that we are ever so close to winning again, so the natural conclusion must be to double up in order to regain what has been lost. The real, subconscious, reason for doubling up on a losing trade is to attempt to get rid of the pain. Now we are not trying to avoid pain, we are dealing with existing pain, and we are trying to get back to that state of equilibrium where we were pain-free. If my free mind argues for a position, and my fear mind argues about the consequences of failing on that trade, then I am essentially arguing with myself. The posh term for this phenomenon is cognitive dissonance. When I experience cognitive dissonance, it is for one of the following reasons. 1. I have trading fatigue or physical fatigue. 2. I haven't done my preparation well enough. Philippe Petit, the man who walked across a wire suspended between the Twin Towers. He is afraid of spiders. Silly, doesn't it? His approach to dealing with fear is worth repeating. He would do everything in his power to understand the nature of his fear of spiders. He would study spiders. He would learn everything there was to know about spiders. Through his study he would come to appreciate the nature of his fear. The greater understanding you have of your opponent, the better you are able to understand what she is doing. I use the word opponent here, but really, the market, she is my friend. I want to dance with her. But I am afraid of making a fool of myself. So, I study her moves. My approach to a non-fearful trading style is a combination of emotional discipline, mental warm-up, and knowledge of what the market can do. I often recommend struggling traders to plot their trade entries on a chart once the trading day is over. I use these to warm up in the morning ahead of the trading day. I would select random files from my old trading days, and I will relive those moments, both the terrible ones, to get me fired up on how to not trade today, as well as the good ones for inspiration. By observing my past behavior, I am able to reinforce my good points while being mindful of my weak points. I will observe the disastrous consequences of my hasty trading decisions and my impulses. I will observe trades where I didn't let my profits run. I will in essence torment myself by looking at my bad trades because I know this will act as a positive catalyst. 71.39% of all Dow index positions were short positions, on a day when the Dow made fresh all-time highs. This is why the 90% lose. We don't see the market for what it is. We see it as we are. We are not losing money over time because we don't know enough about technical analysis or the markets as a whole. We lose money because we refuse to accept what is right in front of us. Imagine you bought DAX index at 15,510 and the market is now trading up at 15,525. Instead of thinking that the market may be on tier, and may go on to offer you many more points, you begin to fear that the points you have already earned will be taken away from you. You should be hopeful in a situation like this. You are not thinking about how many points this position may end up making you. You are focused on fear rather than opportunity. The opposite hold true when you are in a losing position. You are now hoping that the market will turn around. Your sole objective is to get rid of pain, and instead of being afraid that you're going to lose even more, you now hope that you can reach a position in which you will lose less. Every tick in your favor is celebrated. Every trick against you is ignored. If you want to trade well, it starts with being mindful of this behavior. People are hopeful when they are losing money. They are fearful when they are making money. This is how the 90% think. This is why in a study of 25,000 traders, they won more often than they lost, but they lost 66% more on their average loss than they gained on their average win. Hope and fear is what you need to focus on. Your mind is like a muscle. You need to strengthen that mind of yours through repetition. You may be on a hot run and have nothing but winning trades on your screen, but over time it will even itself out. Therefore, it is vitally important you don't think too much about the outcome of one trade, but rather the outcome of 100 trades. The outcome of one trade is random. The outcome of 100 trades is predictable. It is for this reason that our behavior needs to be the same for every trade we execute, whether we like it or not. By applying the same correct behavior to every trade, we are virtually guaranteed to be profitable. A very wise old trader once told me that losers spend their time thinking how much they will make, while winners spend their time thinking about how much they will lose. I have identified a handful of first-hour patterns, which I believe are precursors for trend days. One of those patterns is a gap down after a gap up day, where the gap down is not filled within the first hour. Friday is notorious for producing lasting trends, often leading to trend days, especially on Fridays at the beginning or end of the month. When I am in a position, maybe the position is showing a loss, so now I am battling my subconscious mind, which wants the position to run a little longer. My conscious mind has a stop loss, but my subconscious mind wants me to remove it. It doesn't want to lose. If a position is going well, now my subconscious mind wants me to take my profits. It loves the gratification of a good profit. So, I am battling it whether I am winning or losing on my trades. The key to victory starts with being mindful of the existence of two brains. The subconscious mind is a rather simple beast. It just wants to avoid pain. For the subconscious brain there are two pains in trading. There is the pain of seeing a profit. When it sees a profit, it wants you to close it because then it doesn't have to deal with the pain of seeing the profit disappear. Then there is the pain of loss. When the subconscious brain sees a loss, it wants you to hold on to the position a little longer and a little longer. Otherwise, it will have to deal with taking the loss. As long as the position is open, there is always hope. What separates the 10% of winners from the 90% of losers is which brain they are listening to. Paul Tudor Jones, forget cheap. Forget expensive. It's just numbers on a page. If it kept going down, I would sell it down to zero. If it was going up, I'd buy it to infinity. Having seen Paul Tudor Jones trade, you sense his energy, his intensity and determination, and his utter conviction in whatever he does. He doesn't just say, sell short. He shouts, sell short. Stamps his feet and swings his hands. I admire his mental agility, flowing from being convinced on the long side to turning the position to the short side. Imagine you have two investments, investment A and investment B. Each investment had equal starting value of 100,000. Investment A is doing well. It is up 50%. Investment B on the other hand is not performing. It is down 50%. You are now in a situation where you need 50,000. What do? 1. Close a third of investment A to raise 50,000. 2. Close investment B to raise 50,000. Overwhelming majority opted for option 1. Emotionally, a loss is clearly felt much harder than a win. Otherwise, there would be no reason for this anomaly. Human beings postpone making decisions that will cause pain. It is the reason why we let losing trades run. We want the instant gratification, but we want to delay the pain. Hope dies last. As long as the losing position is open, there is hope. My own motto is, control your mind, control your future. Doing so requires constant vigilance. This is a thought process you have to constantly reaffirm. Our minds tend to drift. There are so many distractions in life, so much superficial noise that doesn't bring substance but that our brains are attracted to nonetheless. The brain would rather look at Facebook and YouTube than sit in quiet contemplation. The drifter brain needs to be controlled through daily vigilance, whether it be through a mantra or meditation or whatever you decide suits you best. There needs to be a regular time in your day where you remind yourself of your purpose, of who you are. I had a girlfriend. She was disgusted by anything that looked and felt fat and overweight. This force was so strong it could disrupt her hardwired pattern of eating food. As humans, we are driven forward by forces. Those forces can be born out of a desire to move away from something, or they can be born out of a desire to move towards something. I believe that disgust is a much stronger emotion than joy or happiness. We all have reasons to be happy every day, but we tend to forget that. However, disgust is not something we are likely to forget. What gets a person to finally commit to a goal is reaching the point of disgust. I got disgusted with my trading over a long period of time. The pattern was always the same: 1. Trade like a wizard. 2. Become overconfident. 3. Blow up the account. I became so sick of it. Positive intentions, sticky notes with mantras on my trading monitor, and self-help exercises don't possess nearly the motivational force of physical disgust with oneself. If disgust can turn eating into a behavior to be avoided, and if disgust can turn an alcoholic's drinking into a thing of the past, then disgust can also turn you into the trader you would be proud of looking at in the mirror. If you have some trading experience, and it is not turning out to be how you want it to be, you have a choice. You can carry on, thinking that things will change. I can tell you they won't, but you will probably not listen to me. Or you can take my advice. You can strip yourself naked, metaphorically speaking, and get honest with yourself. You can stop trading, and start reviewing. You can begin to understand what it is you are consistently doing that causes you not to make money trading. Take yourself apart, clean up the process, take on board my guidance for the mental side of trading, put yourself back together again, fund a small account and start with an entirely fresh mindset and approach. All of us know what to do. All of us have the knowledge to do what needs to be done, but the path from knowledge to action, where we implement our knowledge, is elusive for many people in many areas of their lives. Your mind will drift. This is unfortunate but perfectly natural. The solution is trivial, and it is powerful. You have to constantly reaffirm your purpose. Whether you meditate or talk to yourself while you brush your teeth in the morning, there needs to be some period in your day when you remember your purpose. There must be a time to remind yourself where you want to go, what you want to do. I am a professional trader. I cannot afford to go into the trading ring without being 100% mentally prepared. My profession is a mind game like nothing else. Ed Seykota was right. I did get what I deserved, because I was only good at one part of the game. I was good at the technical part. I actively take control of my inner world. I have to give myself enough confidence to reassure myself that I have enough to go out and kick ass in the markets every day. To make that challenge even more real, I post my trades for the world to see. I do it because it keeps me accountable. It keeps me focused. Technical training is part of my day-to-day job, but the mental part needs more dedicated focus, otherwise it gets lost in the noise of the outside world. I need dedicated time to give that brain of mine a workout. Visualization is part of my preparation. It has been the most useful tool to build mental stamina and discipline. It reminds me of everything that is weak in me. It reminds me of how my mind, if left unchecked and untrained, will go on a rampage to seek excitement and gratification. I sit quietly in my bed or in my office and I imagine I am trading, and the market is going against me. I see myself cutting the loss. I imagine I bought XYZ and I see it going my way. I feel the brain sending me signals to close the position to crystallize the profit. I see myself doing nothing, as I continue to watch the profit increase and decrease. I see a big profit turn into a small profit. I smile and accept it, and I move on, telling myself it is okay. I place my brain under as much stress as I can with imagined scenarios. I am long and the market is going my way, and a sudden news story breaks the market. I observe my fear shooting through the roof as my panel turns into a bloodbath. I see myself closing the position and going the opposite direction. I see myself not getting unhinged just because the market is moving against me. The purpose of my warm-up is to focus on what I want to achieve or become, while being mindful of the things that will most certainly sabotage my goals. One of the clients in our reception cried his eyes out because he had lost £750,000 trading Forex. He was afraid to tell his wife about it. He begged my boss to lend him money so that he could trade again and hopefully make the money back. You may think that this individual lacks the moral fortitude to trade. You may even think less of him because of his apparent lack of dignity. What if I were to tell you that he was a renowned surgeon in a prestigious private London clinic? Education means very little in this industry. It doesn't matter where you went to school or what your day job is. If you don't know how to handle a losing trade, and then a winning trade, you will not go very far in this arena. Matthew McConaughey, there are 3 things that I need each day. 1. I need something to look up to. 2. I need something to look forward to. 3. I need something to chase. There will come a point in your career as a financial trader where you will go through a slump. When it happens, it might serve you well to step back and think deeply about why you are so drawn to this game. What my slump taught me was to slow down, otherwise I will take a huge loss which will dent my confidence. Not every trade is the World Cup final. Not every trading session is the final exam of the final year, the culmination of 4 years of relentless studies. Everyone has setbacks. Kobe, Rafa, Federer, you, me. And, all slumps end. Slumps are inevitable. You are bearish and the market goes up. You are bullish and the market goes down. It happens to us all. Every one of us. Is there a key to escape a slump? No. When I started writing this chapter, I was not in a slump. Then the slump arrived and I described it. As I type these words, I have had a fantastic trading morning. Am I out of the slump? Who knows? I do not know what I am doing differently to what I did when the slump set in. I am simply following the process I always follow. I am a process-oriented trader. The markets determine the outcome. I have little control over that. I have faith. I believe that my process will carry me through the highs and lows of trading. Practice does not make perfect. It merely makes it permanent. Only through a dedicated approach to practice, with a specific attention to finding your mistakes, will you improve. Otherwise you are just cementing your unprofitable behavior. I tend to only feel hope when I am in a trade. I hope my position will come good. I hope the market will move in my favor. Fear, however, is felt in more situations. I can feel fear when I am in a trade. But I can also feel fear when I am not in a trade. Hope tends to be reserved for the activity of being in the trade, while fear manifests itself both when I am in a trade and when I am not in a trade. I can be fearful that the market will move ahead without me, or I can be afraid that I have closed my position too soon, which could also rightly be classified as regret. I deal with fear when I am in a trade by having an exit strategy. I have a stop loss, which defines the size of my loss. I have accepted this loss before I started the trading day. It is part of my trading plan. I will have mentally prepared in the morning, ahead of the trading day. I will have sat quietly, contemplating what I am about to do. I will have subjected my mind to images of me losing. I will have calmed my mind, when it experienced these imagined losses, so as to negotiate away any feelings of anxiety and regret, as well as desires to get revenge and get even. I will have dealt with hope by accepting that my stop loss will define my exit. Maybe I will win. Maybe I will not win. Before the trading day started I will have gone through mental exercises that saw me enter the market, Observe the market move against me, negotiate with my fear brain and the impulse urges it sent to my conscious awareness. By the start of the trading day, I will already have seen myself win and lose, add to positions, and patiently wait for the right setup. By the time the bell rings, opening the market for trading, I am mentally warmed up. I am ready to fail without losing my composure. I love reading about the trials and tribulations of the SAS and Navy SEALs. My son shares this interest. One of the obstacles that these elite warriors have to pass is the 50-meter underwater free dive. My son, he made it a little less than halfway. I made it almost to the halfway line. I beat him by an inch or two. We spoke about how we could get better. We sat on the edge of the pool, and we focused on filling our lungs with oxygen and oxygenating our bodies. Gradually we got better and better. Then we realized that if we swam less frantically while underwater, we would expend less oxygen. Our focus shifted to staying calm and taking rhythmic strokes. By the end of the 7-day holiday, I came within a few strokes of 50 meters. My son was a meter or two behind me. We worked on it, then we evaluated our process. We didn't actually focus on the outcome at all. We just did everything we could to make the process as efficient as possible. Does that remind you of something? If you have a goal that you want to make X amount of money a day, or a certain amount of pips or points, you might be sabotaging your chances of making a lot of money. You are outcome-oriented. You would benefit immensely from shifting your focus to being process-oriented. Do you know why I am so good at trading? I am exceptionally good at losing. When speculating in financial markets, the best loser wins. Don't underestimate these 4 words. Though it may go against the conditioning that life and the modern world have programmed you with, success in financial market speculation is not about being best, coming first, or winning. Instead, it's about losing. Your relationship with fear and adversity will to a very high degree define your life. My secret ingredient is a couple of files on my hard drive. The PowerPoint file is my cue. At game time, before I begin to trade, it's time to become someone else. In the movie Gladiator, why does Maximus Decimus rub dirt on his hands before combat? It's a ritual. The PowerPoint file contains old trades, mistakes, triumphs, inspirations, and warnings visually arranged to prepare me for the day ahead. I need to become something else, otherwise I will not make money. Trading looks simple, but trading successfully goes counter to every piece of DNA stored in your body. By warming up my subconscious mind, I am able to flow in and out of winning and losing trades, day in and day out, without it affecting my strategy. I have found that if I get overly happy about a win, I tend to get overly sad about a loss. I don't want that. I prefer not to feel anything at all, rather than going through that emotional roller coaster. I win. Move on. I lose. Move on. I think differently from the 90%. I assume I am wrong until the market proves me right. I expect to be uncomfortable. There is an ideal mindset, one that is flexible to the extreme. It does not care about winning. It does not care about losing. It is a carefree state of mind, but it acts in your best interest. The ideal mindset might be fearless, but it is not reckless. The ideal trading mindset is at peace with losing trades as it is with winning trades. Your emotional state will stay in balance. When we do not operate from a frame of mind of the ideal mindset, we are afraid of something. This fear is a manifestation of a lack of trust. We do not trust ourselves to do what we have to do without hesitation, without reservation or internal conflict or argument. Our mind is the problem. Our mind's core objective is to keep us alive and avoid pain. We are automatically wired to think in a way that keeps us alive. This thought pattern is hard-coded into our DNA. It might keep us alive, but it makes trading difficult. There is randomness in the outcome of 1, but there is order in the outcome of 100. Every moment is unique, which explains why even when you had 15 heads in a row does not mean the odds of a head are less on the 16th throw. They are still 50-50. However, over time the law of averages will come into play, and over 100 throws, you will experience 50 heads and 50 tails. Information on its own has no power over us. It is our belief system and the energy we give to the information that decide its potency. If you receive an email from an unknown person saying, "You are a dead man," the chances are your emotional reaction will be very different than if you received an email saying, "Du er en dod man." The message is the same. One in English, the other in Danish. On its own, the sentence is merely a construct of letters put together. Once it is decoded by the brain, it is assigned an emotional charge. The sentence is meaningless. It is how we interpret the sentence that causes the emotional response. So, imagine a mindset where you can perceive the market information purely from an opportunistic point of view. You are not threatened by the information. You merely observe and decide from a frame of mind that sees opportunities. It does not see threats. The market moves up and down in ticks all day. These ticks form patterns which we trade on. If you have a position on, these ticks take on a life and meaning of their own. They validate you, or they diminish you. That is not how you want to trade. That is not an ideal mindset. The trader who has a position on in the market will focus automatically on the price movements, the ticks, that move in his or her favor because they relieve pain and give pleasure. Movement against the position create pain. This state of mind is not open to other possibilities. The more fear we experience, the less information the mind will focus on. It will narrow its focus. It will stop you from perceiving alternative options. The goal is to create a mindset that always acts in your own best interest. It is a mindset that allows you to see opportunities. It knows your weaknesses and what to be mindful of. It allows you to receive information without being threatened by the information. My biggest belief I had to overcome in trading was the associations I made when I was confronted with losses. I had to learn how to disassociate losses from feelings of failure or feelings of wanting to extract revenge on the market to create a state of mental equilibrium. Achieving that was a momentous leap for my trading performance. I decided I needed to relive my trades to truly figure out what my problem was, so I created the Book of Truths. The breakdown of my performance was incredibly cathartic. I took great pleasure in reviewing my own mistakes, because it felt like I was actually meaningfully moving towards a better version of myself. I took a very time-consuming decision to put all of my trades on the relevant charts. I created a PowerPoint containing every trade to give me visual imagery of my performance. This is the Book of Truths. I will argue that this process stood out as the single most beneficial practical exercise in enhancing my performance. I was, and I am, confronted daily with all my flaws, and I have a visual representation of those flaws. It seems as if the act of portraying a loss in a visual representation is a much more powerful tool for change than merely writing "Don't trade without a stop loss" on a post-it note and taping it to your screen. I use the PowerPoint file to warm up every morning before trading begins. I am reminded of the things I am good at and the things that tend to be my downfall. It has become an integral part of my process to ensure I am acting in my own best self-interest. When I started the process of visually recalling my old trades, my old hurts, my old successes, I felt an empowering surge to replicate what I was good at and avoid what I was bad at. I immediately began to trade differently. I immediately saw measurable improvements in my trading. Your prime objective as a day trader is not to make money. Your objective is to follow the strategy you have developed. More importantly, your prime objective is to follow the process you have designed for yourself. If you follow the process, the outcome will take care of itself. My review of my trades revealed that I didn't trust myself or the markets. Profitable trading requires trust. If you don't believe it can happen, you should not even start. If you don't trust, then you will not make money. The goal is simply to be an unemotional observer of the market. The goal is to act without fear, without hope, without anything but an objective assessment of the price action. Every moment is unique. Just because I was rejected by a girl the first time I invited her for a dance does not mean I will be rejected the next time. But my mind might think so I have an argument with my conscious thinking and my subconscious beliefs. My rational mind might say, the next girl will say yes to a dance. My subconscious mind, unbeknownst to me, might say, no way amigo, give up, she will never dance with you.